Welcome to another vlog here on Wolf of Dubai, your financial stock investing channel to make you the better investor. And today we are talking about iRobot and 100% trading chance. If this sounds interesting to you, then you should stay tuned. Here we go.
Wolf of Dubai.
Alright, so first of all, I want to talk with you about iRobot and the story of iRobot. So iRobot is a US company that produces their robots for cleaning homes, so vacuum cleaner robots, by the way. These products, once bought, will clean autonomous your whole house. And they also, develop some other products like floor sweeping products. And they, even if you buy them both together, they first vacuum the place, then they floor wipe the place, and you have a beautiful home and always clean. So iRobot is actually the market leader in these robots. They are actually so good that they can scan the whole environment. So iRobot also has a huge database of scanned homes potentially as well, and sitting on this big data, I believe, being the market leader, having this big data, and also the valuation of the company was for a long time very interesting for me, and that's why I followed the stock, right? I didn't bought into it, I followed it first. What you should always do when looking for stocks and you like a stock, look how it develops, especially with political turmoil. And exactly this happened. So this stock, right, it was about $130 per share in April. And I'm not talking about April 2002 or 2003. I'm talking this April, 6 months ago, right? They were at 130 and they just fall below 40. So they lost about 65% of market value, and we will discuss why and what happened. And also they released the Q3 earnings, which we will discuss today, because this was one of the triggers that the stock just lost 20% of market value. And let's dive therefore into the numbers of the Q3. So before talking about the numbers, I want to tell you in which turmoil they are, especially the US market. They are producing the robots in China and importing them to US. And on these robots, on all the items, they get the 25% tax or tariff on it. So as you can see, the products get more expensive, and this is obviously a huge problem for the margin, for the revenue of the product, and so on. So this is the situation that the company is into, and that's why it fall a couple of decent percentages, double digits until now. And now the Q3 numbers came out, and another 20% lost market value. This is unbelievable, guys. And if I tell you the numbers, though, you will see that the numbers are not so bad. Actually, they are still growing. They don't make any loss. They're making profit, right? They are in the process of having more and more international sales. So the company looks quite healthy. And also the valuation is pretty good right now. So they're on the PS ratio of, around 1, a little bit more than 1. So they actually worth $1.3 something billion, and they are making $1.2 billion. So you see that they are making in 1 year what they are worth. And they are also, the PE ratio is now around 14, which is very attractive as well. So, but this is for the conclusion later on in this video if you stay to the end. But make sure first to subscribe and smash that like button. And we are diving first into the Q3 numbers. So Q3 revenue grow 25% internationally, 27% in the EMEA region, 40% in Japan, and they are suffering 7% decline revenue in the US. The quarter seems to have more revenue than expected, because they moved an order that was for Q4 into Q3, and that's why they have much more profit and also larger profit than expected, which we will dive into now. But you see, even though they bring this US big sale into this quarter, they are still saying they lost 7%. So this, you can see how impactful this is for the company in the first place. And that's why also you have seen just after the numbers, first it jumped, but later on when we continued into the numbers, the guidance went a little bit lower, and the people on the shareholders apparently got scared of the stock, and the stock lost 20%. As of this recording, the stock was down around 12% only, so they gained from this low 8%. So you see the trading chance there, okay? And stay tuned, because we are talking about the trading chance in the end of this video. So moreover, they're having new roboters that trial beta in Germany and in the US. They have a good new HP executive that came on board, so also very good news. And actually they reported a revenue of 289.4 million compared to 264.5 million for the third quarter of 2018. So you see also their gain year over year. Revenue for the first 9 months of 2019 was 787.2 million compared to around 700 million in the same period of the year. Operating income in the third quarter was 42.6 million compared to 37.3 million, so also a huge jump over there, more than 10%. And also the operating income was 70.1 million versus 76 million in the comparable 2008 period, so you can see the operating income was much less. So now we're going into the earnings per share, which was $1.24, which was way better than expected. Okay, the market expected around 50-60 cents, so this is way over expectations because of the order we just talked about that they put into this quarter. So however, it's also much better than the compared 2018 number, which was at around $1.12. And as you can see, those numbers are pretty good. And if you see these numbers, then you say, wait a second, should this company maybe not be in the positive rather than 20%? And even when they go down, 20% is way too hard. Way too harsh for this environment. Also because we see, an ending, or let's say at least a pause or a productive next steps in the trade war as well. So maybe they will be relieved soon. I don't think it will be in the next 3 to 6 months, but still there's light on the horizon for the trade deal, right? So I think one of the most important points is also, once a company go down with the guidance for the year, the people get usually scared out of the stock, and you have this big movement. So apparently they did this as well. So the current expectation for the revenue this year will be 1.2 to 1.21 billion US dollars versus 1.2 and 1.25 billion previously communicated. The operating income is expected up to 80 million, and it previously communicated was up to 100 million, so like 20% less income there. And earnings per share is expected now $2.8 per share, and it was maximum of 3.15 expected. So you see there's this guidance, this expectations for the full year that was adjusted to the lower end, and but still not that of much big deal. And let's jump into the conclusion. So as you know, I believe that turnaround companies are one of the most profitable gains, right? So let's look into that. The stock was 130, now they are under 40, that is about 65% less. But if the stock just will gain back to 100, so still, much less than the highest top price all-time high, they still will gain 100%, all right? And I believe this is absolutely possible if, you know, they continue to grow. They're growing 10% per year. They are super cheap as of now. The question is, will I invest now? I believe I will still wait, because there maybe they go a little bit more down in the earnings season. You know, it seems to be quite back and forth, positive and negative vibes over there. So it's not sure how it all play out, but I could imagine to start buying now into the stock, you know, and maybe on the way down or on the way up, I pump up and build up a nice position. So definitely something you should look into it. Let me know what you think about this in the comments. Thank you for watching, and see you tomorrow, because I'm vlogging every single day.